You're listening to the Manning Up on Real Estate podcast with your host, Cameron Manning. We bring you the industry experts each episode who will help you man up on your real estate career. Got a lot to talk about this week on Manning Up After Dark on the Manning Up on Real Estate podcast. Welcome back, everyone. Thanks for tuning back into the podcast. We have had quite a bit of news come out both in US and we've got some market updates for you guys here when it comes to what's going on in Greater Vancouver and Fraser Valley. But first and foremost, let's talk about the elephant in the room. Donald J. Trump has been officially voted back in as president to become the 47th president of the US following a crazy election. Watching what was going on the last little while, I mean, between the back and forth between the Democrats and the Republicans, to watching how everything was going back and forth. At the end of the day, it was still a fairly close race, and yet he did win the popular vote and of course won the electorals, and meaning he is now going to be the president. Following that brings us into our first piece of news, is the fact that the US Feds just dropped their rate by another 0.25% just after the election. At the end of the day, this is something that we want to watch as Canadians, because what they do, a lot of what happens with the Bank of Canada tends to follow. The US being one of the largest global powers in the world does impact a lot of what happens in other countries, including us here in Canada. When they do rate drops, we can probably expect the same. Now, recently on this podcast, I had a couple people talk about it where they thought that we would see before the end of the year a 0.75% rate drop.
Before Christmas, we'll see 0.75 basis rate cut. So it's either going to be a 0.5 and then a 2.5, or a 2.5 and a 0.5.
We already had the 0.5. So will the Bank of Canada for the last rate announcement drop an additional 0.25? That rate announcement is going to be on December 11th. So we're definitely going to have to keep our eye on that and see what the Bank of Canada is going to do when it comes to our interest rates. The Bank of Canada has said that they have a target of around inflation, or the Canadian Price Index, to be around 2%. That is stable growth for an economy, a stable inflation rate. And the most recent data that came out was that in September, we hit about 1.6%. Now, the data is not going to be available until about November 19th when it comes to what has happened in October and where that inflation rate sits. That is going to be a major indicator whether they will drop that rate on December 11th or not. So we're definitely going to be watching that very, very closely. If we continue to see under the target rate of 2%, what we're likely going to have happen here in Canada is more rate cuts, because they're going to need to stimulate the economy. When that inflation rate is too low or getting towards that 0%, no growth is not a great thing. So we have to find that happy balance between not too much inflation and things are getting way too expensive for Canadians, but at the same time, not enough inflation where we don't see market growth. Again, if that continues to stay under the 2%, we'll watch the October stats come out on the 19th. We can then likely expect another rate drop in December. I talked about it in one of my previous episodes, and I just want people to understand that just because we have rate drops, it doesn't actually mean that we're going to see changes in the market right away. Now, we are going to see changes over time. There's typically a lag effect on any announcement that happens or any change that the government does in terms of regulations, interest rates. If we see the rate come down, as investors or as buyers or savvy people watching what's going on, that means it's probably a good opportunity to get into the market before the masses do. The masses are going to watch it, they're going to see the change, and then they're slowly going to make their decision whether they're going to get into the market or not. So you, as somebody who's listening to this podcast, you know that if that rate comes down, we're likely going to see some changes in the market, and you're going to want to get ahead of that if you want to take advantage. Now, speaking about that leads us right into the market stats. What is actually going on in Greater Vancouver? For this, I'm going to share my screen here. We are here on the Stats Center, and of course, we are looking at the October stats. In the last little while, when I was looking at these stats here, we saw inventory was skyrocketing, which we can still see here in these trends, and we saw that sales were going down. Again, a bit of a lag time, but we are seeing some of the effect of that 0.5 rate drop that the Bank of Canada did. So if we take a look at it here, we saw inventory come down very slightly from September to October. Now, this is a good sign if you're a seller, because the less inventory that's on the market, the better opportunity you're going to have to sell, especially at a good price. The more inventory there is, the more choice there is for buyers, the more you're competing for their attention, and prices are going to drive down. Now, saying that, again, we are still very very high on the inventory compared to earlier this year. If we look at December here, January, we are down in Greater Vancouver at about 8,817. We're still sitting at about 14,000 listings right now. And of course, for Fraser Valley, around 4,500, now sitting at 7,500. So it's still a large amount of inventory that we've gained. Part of that is due to the fact that as we gain more listings, we're not selling them off as fast. Some listings are taking months to sell, especially if they're not properly priced. This is one of the key things that if you are looking to sell your property, you cannot look at what has sold a month ago, 2 months ago, 3 months ago, and expect in a declining market to get the same amount. You need to price it ahead of the market. And by pricing it ahead of the market, let's say hypothetically, round numbers, a property sold for 550 in your complex. Let's say it's Strata. And you say, well, I want to get 550, but every single month the values have been coming down. You need to price it ahead and maybe look at pricing it at around 540,000. Now, if it's for a detached house, let's say it's 1.5 million, you might have to look at listing it at maybe 145 using the same kind of metrics. It's going to be greater on the greater scale of the type of property. One thing I want to look at here is new listings. As you can see, new listings, we had a bit of a spike from September, but they have been on the decline throughout the summer. So while inventory was increasing, that's because we were not, you'll see when we look at sales, we were not selling enough. So we were still, even though we were seeing a decline in the new listings hitting the market, we still saw a gain overall because we were not absorbing the new listings hitting the market. Now we can see here, last month, we gained a total of 5,446 new listings in the Greater Vancouver area and an additional 2,859 for the Fraser Valley and 452 for Chilliwack District. So that is a significant amount of new listings come to the market. And if we don't absorb them, we will see that number continue to rise. However, talked about how there's a bit of a lag time. We had the announcement in September for a 0.5% rate drop. We have started to see some of that impact now as we head over to the sales. In fact, we had a decent jump through the September into October. Throughout the fall, we saw from April, things peaked. We had some real increase in sales, and then it kind of started to fall off in most areas. However, looking at both Fraser Valley and Greater Vancouver, from September, we only had 1,837 sales in Vancouver and less than 1,000, almost less, just about 900 in Fraser Valley. We have jumped quite a bit to 2,624 in Greater Vancouver and over 1,262 in Fraser Valley, and of course, Chilliwack District, 242. That's been pretty stable, Chilliwack District. They haven't had a lot of fluctuation overall. And again, it's mostly due to the size of the market there, as well as the affordability factor. But that's a nice sign to see the fact that we've seen a jump. Now, I don't get too excited by the fact that the market saw a jump in 1 month. I like to watch the trend over a couple of months. Now, this is a good indicator to start with, and that if that trend continues, if we see November stats also saw an upward trajectory in the sales, well, that's going to be an indicator that we're seeing more buyers come to the market and we're going to see some potential upward pressure on prices. But if we don't see that jump again in November, that means that we might not see that upward pressure. Could create some opportunities for the savvy investors, especially those who are watching or listening to this podcast. One thing is we do see here, obviously, is the sales price. When we look at the average sale price, we have been coming down in value. We peaked out in June and it's been coming down, especially in Greater Vancouver, and it still is down slightly over last month. Last month at about 1,255,000 average to 1,248,000. So prices are still coming down. We're looking at it down just about 4.1% over last year. Chilliwack and Fraser Valley is up very slightly, but again, you saw that they've been kind of fairly stable throughout. They had some massive price drops when rates came up. They've kind of leveled out now. We haven't seen, we've seen fluctuations, don't get me wrong, but it's not as drastic as it has been in the Greater Vancouver area. And obviously Chilliwack took a little bit of a hit and now they've been on the climb back up. They're up 6.8% over last year. Again, we're seeing the tale of three different overall markets, and that's very key to mention as well. And I talk about it often. You have to look at the actual stats of the area that you're looking into. You cannot rely on the media saying a blanket statement that the market is up or the market is down or inventory up, inventory down. You have to look at all the sub markets. Are you looking at detached? Are you looking at condos, townhouses? What area, what sub area? Is it 1 bedroom versus 2 bedroom condos? Is it 3 bedroom versus 4 bedroom townhouse? Do the properties have suites? It is a lot of things you actually have to really pay attention to. Now, as it sits right now, the sales to active listing ratios have gone up. They have spiked because with the sale increase and the fact we've seen the inventory come down, it has pushed us back into that balanced market. We were teetering early on in the months on those buyers markets. Now we've pushed back into a good balanced market. We are seeing some properties start to move. What it boils down to is pricing at the end of the day. Again, you cannot continue to focus on what was or what your neighbor got. You have to price to the market of now. And one of the biggest things I can remind you of is days on market is the enemy of your home's value. So if you're sitting on the market and you're hitting 30 days, 35, 40, 50, buyers are going to look at your property as if there's something potentially wrong with it, and they're going to be looking for deeper discounts. So the best way you can get ahead of that is adjust your price accordingly in order to get your property sold and maximize what you can get in the market. You don't want to chase the market down. As we lead into December here, I think now is a great time to list your property, and let me explain why. Well, first and foremost, you're going to have less inventory overall. Those listings who listed before thinking they were going to sell in the fall, they're going to start to come off the market. A lot of properties come off the market in December because, hey, it's Christmas. Why would I list my property during Christmas when I can just take it off? I'll think about doing it in the springtime, and I'm just going to enjoy Christmas with my family. So you're going to have less competition overall, but there are serious buyers who absolutely still have to buy during this time. One, you could be attracting investors who are looking to get a property in for part of their tax strategy before the end of the year. It could be people relocating for work. Maybe they're starting a new job in the new year and they have to get into a property before the new year. So there are going to be serious buyers. So if you're thinking about selling, I really recommend, now's probably the time to put your property up for sale, because if you wait till springtime and you wait till everyone else sees the same thing, you can see that impact here. In the springtime, we see the inventory rise, meaning we're giving more opportunity for buyers to be choosy on the type of home, especially if we're not seeing those record level buyers that are coming out in droves like we saw in 2020 and 2021. And I guarantee we're not going to see markets like that for a while. We might see some activity pick up, but we're not going to see those insane numbers because interest rates just aren't as lucrative as they were before. We're not seeing those rates as low as we saw them at that time. So while buyers are going to take advantage of the rate drops, they're buyers who are wanting to buy. They have to buy for whatever reason. They're upsizing, downsizing, getting into the market, taking advantage. We're not going to see the flood, and we're not going to see, I think, a lot of the investors coming into the market like they did in droves. I think the speculation is going to be a little bit sidelined right now with everything that the government has done, between speculation to flipping taxes to everything like that. Pricing your property and putting it up for sale in times where there's less competition is absolutely going to be key. Anyways, I just wanted to bring that to your attention. This is episode 4 of Manning Up After Dark. I hope you guys enjoyed it. Thanks for joining in with me on this weekly experiment here. If you guys are enjoying these episodes, please do me a favor. If you're listening to this podcast, drop me a rating on wherever you're listening to it. 5 stars, please, please, please. Now, we are going to be getting back to more interview-based content as well on this podcast. This Manning Up After Dark is just getting us back into the groove of it. We will be bringing out some amazing speakers for regular podcast episodes. We have our Investors Performance Group meeting, if you guys are listening to this, on November 14th. So that's next week. So if you guys are interested in finding out more about, staying ahead of what's going on with investing, learning about the market, we're going to dive deeper into some of these numbers and some of the sub areas. And of course, we have some amazing speakers, including Keaton Bessie this month, who is a property manager. He's going to talk about everything you need to know as a landlord in BC to navigate all the changes we've had. Go stop by my other YouTube channel, youtube.com/Cameron Manning. Subscribe to that channel, and we will be live streaming it at 7 p.m. Pacific time on the live tab. So go check that out. Again, thank you so much, and we'll catch you guys on the next episode of Manning Up After Dark on the Manning Up on Real Estate podcast. Till next time.